Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am excited today. There's so much to talk about. I'm here with Pastor John Antonucci, and we are here to talk about the market, talk about the election, and talking about your retirement. So stay tuned. It's going to be a great show. Good morning, John.
Good morning, Alfie. Great to be in studio with you, and good morning, Southwest Florida. And as always, if economic uncertainties have put your financial decisions on hold, you really need to grab a hold of Alfie's free toolkit that will help transform your worries of retirement into confidence. You know, inside Alfie's complimentary toolkit, it's going to give you a wide range of materials such as will your money last as long as you do? Are you paying too much taxes in retirement? If Alfie can reduce your tax liability, obviously that's going to put more retirement savings into your pocket. Social Security Decisions Guide, when is the opportune time to take it? And will a recession rob your retirement? To get Alfie's toolkit, simply call the operator and ask for the kit, or you can just text the word KIT, K-I-T, to 239-747-1077. Don't wait till we go off the broadcast today. Pick up your smart device right now and call the operator or text the word KIT, K-I-T, to 239-747-1077. It's time to get a worry-free toolkit and put Alfie's wisdom of 40 years as a certified financial planner professional to work for you. He wants to be in your corner, so text the word KIT or call the operator at 239-747-1077. Alfie, a big week in the market. Markets came back strong, and, Elon and Trump talking for 2 hours.
Yeah, that's amazing.
What an incredible interview that was, and I know you got a lot on your mind that can help investors really navigate the fog of investing this week.
You know, you could just tell, John, if you had two businessmen, and that's what J.D. Vance and Trump are. And you know what Trump has done. He already did it. And then you have two people on the other side that are really not talking about any type of plan. They're just reading from the teleprompter. And when they do talk about a plan, it's Trump's plan. It's crazy how they're really just taking everything that Trump's been talking about. And when Kamala says from day one, I'm going to bring down inflation. Okay, well, how, if you could do it from day one, why don't you go ahead and do it right now, because we still have about 5 more months.
And she's going to close the border.
And she's going to do this. She's going to do that. It's I hope people wake up. And, you know, for someone like Elon Musk, that's a multi richest man in the world, and for him to put himself out there like that in front of the government. Now, I mean, this is a government. You have the UK, saying, hey, you got 30% of your listeners are from us. We're going to, we can shut you down. Yeah, it's really disgusting. But you know what? He knows what communism is. He knows what a repressed, country is. And he doesn't want this great country to be like this. So for him to open it up, and he opened it up for her too. He says, hey, listen, I'll interview Kamala Harris, and you have a platform here too. But she cannot do what Trump just did, this a few days ago. So, and, of course, they try to do everything they can to stop it. And it had some difficulty at the beginning, but it was a pretty amazing 2 hours of talk from two businessmen, two billionaires that have employed thousands and hundreds of thousands of people in their lifetime.
Yeah, and it's interesting that they know how to get this country back on track, and we've gone sort of too far to the left. And even Elon was interesting that he was a moderate Democrat for most of his life, and now he's endorsing President Trump. The Democratic Party has gone so far left that really it's an easy decision. Either you want more government, you want socialism, you vote for her. You want free markets, you want businesses to thrive, you vote for him. I mean, it's pretty dry, isn't it?
And then you had Nikki Haley on Brett Baer a few days ago, talking about just use her. You don't need an interview, just use her own words. She's for, against fracking. She's
changing all that too now.
Yep, but you got to use her words. She kept saying, use her words. Just use her words. She's, just a few months ago, she's for all this. And so, you can't change. I think people are going to wake up. I was feeling a little down and out. I was talking to Drew last week, but I think people have to wake up. And I think Trump has a trump card that he's going to use. and we're going to need it to win this election. And what does this mean, this election, to your retirement? Because a lot of people have come in and they have questions, they're concerned about it. So there's different things you can do. There's something that's called buffer ETFs. There's our structured notes, things that give you some protection and give you upside protection, upside with downside protection. So let's talk about what came out this week. We had the producer price index came out. It did increase a little bit, 0.1% in the month of July. And it's a key measure of inflation. So that really, the markets didn't do a whole lot that day. It's when they came out, it for the year, it's at advanced 2.2%. Now, the PPI is excluding some major parts, though, John. It excluding food, energy, and trade. Okay, so the PPI is, is not your typical inflation of 2% for the year. When you're excluding food, which is up by 20%, we had people, if you see them, there were some interviews for people walking out of the grocery store, and it's people are hurting. The one percenters, the top 20% earners, they're not feeling it as bad as people that are working, having to work two jobs, having pay for insurances. They were saying your homeowner's insurance or your car insurance, I heard, is like 50% higher than what it was a year ago. So these are things that that you cannot you have to go into your savings. If you're just making it last year, or if you're just making it in 21, or when Trump was president, you're saving. Well, all the money you were saving, you're spending right now. Now you're getting into your savings just for the essentials, and that's not good. So the PPI is a little bit different than the consumer price index, because consumer price index, it's a price from with the perspective of purchasers. So these are the people that are buying versus the PPI is the people that are more of the seller. They're selling, and the PPI is buying. So that's a big difference. And the consumer price index on Wednesday, inflation rate is now at 2.9%, lower than anticipated. So that part was good. Inflation is coming down a little bit, but when you're excluding a lot of things that are up, it's sort of not fair.
Are they excluding it so the numbers stay low? Because if you put food in there and you put energy in there, you're going to be
and that's why even though inflation's coming down, it's still going to be one of the hot topics for the economy, and inflation and economy is going to be one of the top things for this election. And that's why I think Trump still has hope. With all the media against him, I think he still has hope, because he can talk about the economy better than anybody, because he has a track record, and he knows how to get the economy up and running again. He knows how to get inflation down, and he knows how to get immigration. So these are the big things, the immigration economy. If you just stick with that, you're going to have a winning ticket.
Yeah, well, we're in an election year, and it's going to happen probably within under 80 days now. I don't know the exact count, but you need to position yourself, especially your financial plan. And if you don't have an income plan, if you don't have a strategy, you want to sit down with Alfie in Fort Myers or Naples. He has two beautiful offices, and he does what's called a retirement simulator process that will be a deep dive into your current portfolio to see what's really going on. He's going to put your portfolio side by side with his and take you back 5 years prior and see how his would have performed next to your current portfolio that did perform. He's going to make sure that you're not taking undue risk for the amount of return that you're getting, make sure that you're allocated properly, that you're diversified correctly. He's going to expose all the hidden fees inside your portfolio that you don't even know that are there, that are eating up some of your returns each and every year. And he's going to create a customized, tailor-made income plan and a strategy that will get you to and through retirement. To take advantage of Alfie's retirement simulator process, you have to be one of the first 5 callers right now. Don't hesitate. You can only get 5 in this week. Pick up the phone, call the operator, or text the word VISIT, V-I-S-I-T, to 239-747-1077. Again, you want to call the operator and tell them, I want to take advantage of Alfie's retirement simulator process. It's complimentary. Be one of the first 5 callers right now. Either call the operator or text the word VISIT to 239-747-1077. Alfie's going to add value to your life, and he's going to get you to and through retirement. Stay tuned. We're going to be right back right after this break, so don't go away. Welcome back to Saving the Investor with certified financial planner Alfie Townsend. You know, Alfie has over 40 years experience as a CFP. He's also a fiduciary, which means his responsibility to you is to you. And his book was in high demand last week, and due to popular demand, Alfie is offering his book again. A complimentary copy of his book awaits you. To claim your book, all you have to do is call the operator and ask for it, or text the word book, B-O-O-K, to 239-747-1077. You know, Alfie's book is your guide to a fulfilling retirement. You don't want to miss the valuable insights, including many, many stories about investors that he has helped save over his 40-year career. You know, that's why he named this broadcast Saving the Investor. He wants to save you from the pitfalls, the schemes, the traps of Wall Street. Simply call the operator or text the word book, B-O-O-K, to 239-747-1077. That's 239-747-1077. We're talking about the market in review. And Alfie, the Fed is going to meet in the month of September. And, you know, he's been putting off the cut. Do you think he's going to cut in September, or do you think he's going to just ride it right through to October, maybe into the fourth quarter?
I think what happened last time when he wrote it and everyone thought it was going to be a cut, the market really did not like that because that was already priced in. See, the markets look ahead. The markets aren't looking at what's happening today. They're looking at what's happening 6 months from now. So the market's already priced in that rate cut. Nothing happened. So I think this one, there is a 0.25% rate cut. It could even be a 0.5% rate cut in September. And they're not going to meet again after September until, you know, I think it's October or something, or November, but it's going to be it needs to be probably a 0.5% rate cut because the economy is slowing a little bit. We need a little bit of break. But what does that mean when they cut rates? If Fed cuts rates, it's going to affect, one good thing is mortgage rates. They're going to go down.
But 0.5 point is an earth-shattering. It's not really going to make that.
0.5 point's pretty good. It's, you know, the 0.25 point is something that's not going to, you know, make or break you too much. 0.5 point is a pretty big cut. You're going to start to see it, and then, you know, the 10-year Treasury is coming down. So what else is going to start coming down is your savings. Okay, so your money market. So right now, if you have, we call this thing lazy money. If you have money sitting in accounts and you're loving life because you're getting that 4 or 5% right now, when they start cutting rates, you're going to be losing that. So what we're telling our clients, lock in some of that money right now. Lock in some of that money. We have some 3 years, 5-year type of vehicles that will give you that 5 to 5.5%. If you can lock in 5.5% right now for, you know, 3 years, 5 years, that's a pretty good ticket because you know prices are going to start coming down and you're going to be getting 2 or 3% more than what you would have been getting. So that is a good thing. So if I always say if you're, you know, planning on taking a road trip and your tires aren't the best, you know, you probably want to go ahead and get those things fixed, right, John? You know, you want to go ahead and replace those tires because you could have a blowout. And the same thing with this, we know that rates are going to go down as rates go down. And we have this election year. So you know they're going to go down because they are, even though they try not to be political, they are political. So rates will go down to help get the economy up and running even better, keep it from going into a recession. So if you want to lock in some money, if you have money sitting in these accounts that are not tied up, but you're getting pretty good interest on, let's you know, look at some different options we have. We have also, you know, our structured notes are doing fantastic. If you're looking for income or you're just wanting to make about 8%, that's what it's paying right now, 8% interest, and that's guaranteed for 21 months. These are vehicles that if you want to take the income, you can start the income immediately. It gets deposited right into your checking account each and every month. If you want to do that, we have that. Or if you want to just let it roll back into your account, you can do that. But, you know, if you can stay ahead of inflation, this is what you want to do in times like this. And take advantage of some of these rates that are going to start coming down. But and the reason why they're coming down is this, John. We were looking at this, and these are some pretty heavy statistics. So just in the month of July, 10%. It increased 10%. The U.S. Budget deficit increased 10% from just a year ago. And this is really from government spending. We got, I think the government, and it's not just the Democrats, it's the Republicans also. They just like to spend. Democrats like it a little bit more. And, these bigger interest payments add on to the debt. So the gap between the federal spending and what the taxes the government collected in taxes rose to $244 billion just in the month of July, from $221 billion at the same time a month earlier.
Wow.
So that means there was $23 billion more from June to July. And that means that we are spending so far year to date, interest just year to date for the first 10 months of the fiscal year is $763 billion. I'm going to say it again. $763 billion just on interest payments for the first 10 months of the fiscal year.
That's on interest. That's not even the gap between spending and collecting, which is every 4 months. You're talking about $1 trillion. It's crazy.
More than what the federal government has spent on Medicare or the military. So this is what I talk about. The government can't control their spending habits. With these interest rates high, it's good for savings and stuff like that for us, but it is not good for our deficit. It is killing the amount going into the deficit. So with this type of debt, what happens is we have to, the government is going to have to, raise interest rates. They're going to raise taxes, lower interest rates. I hope that will help a little bit, but they're going to raise your income taxes. And if Kamala gets in, you're talking about huge rate increases on taxes. So there's some planning that you probably need to start doing and looking into, how can you save on taxes? How can you save on taxes? How can you lock in some of these rates right now that are good, but they're going to start going down? These interest rates that are good, but are going to start going down. So there's a lot of planning that goes on here at the Advantage Retirement Group. We look at taxes, but we also look at, safe places to put money right now. We got election year. There's a lot you can do. If your advisor isn't really talking about these things that we're talking about today, you need to give us a call. John's going to give you the number, but you need to give us a call just to have a second set of eyes to look at what you have. I've been doing this over 40 years now. I'm a certified financial planner professional. That means we look at the whole picture, not just part of the picture. So listen to John to get the number, get ready to write it down, and he'll get this over to you.
Yeah, it's very important. Alfie's talking about taxes, and there is a ticking time bomb that's out there that's going to continually go up. And if you don't have a plan or a strategy, it's going to affect you well into your retirement years, because the money that you have saved, whether it's $1 million, $5 million, $10 million, whatever it is that you have there, when you start taking it out, you're going to pay taxes. And when those taxes goes up, that's going to reduce your retirement income drastically. So you need a plan that addresses uncertainty, instills confidence in your future. And as a certified financial planner professional, Alfie has put together what's called a tax map that will strive to help you achieve 3 key goals that you need to focus on right now. Number 1, lower your tax bracket. Number 2, protect your money when taxes rise. And number 3, create a tax-free income. You want to be one of the first callers right now and either call the operator or text the word TAX, T-A-X, to 239-747-1077. That's 239-747-1077. Don't hesitate. Call or text now to request Alfie's tax map. This is the time to minimize future taxes and generate tax-free income right now. All you have to do is call the operator and ask for his tax map, or text the word TAX, T-A-X, to 239-747-1077. Alfie, you hear President Trump talking about wanting to reduce taxes, especially on those that are making tips. Now she's jumping on the same bandwagon and saying the same thing. But if she gets in there, there's no doubt about it. Taxes are going to have to go up at some point on somebody in order to pay what you just talked about, $763 billion in interest over 10 months.
And another way to, it's not just raising taxes. So the difference between a Democrat's their philosophy is raise taxes, more money will come in because you're taking more away. But when you're doing that, you're taking more money away from people to be able to spend to pay other taxes. So that's one way of doing it. The other way is I like better. Is President Trump is saying let's raise all boats, with tides. That means let's get people working again. Let's get good paying jobs. Let's get the economy going. And then more money will be coming into the coffer of the government to help, decrease. And then you have to reduce spending. So you get the economy rocking and rolling. You get spending, less spending. That's how you can reduce deficits. And that's how I would rather it be than increasing your taxes. And then you're going to have increased taxes, less money is going to be spent on the economy, then that could create some problems there. So it really needs someone that understands, how to get the economy up and running again. And I think people open their eyes, they're going to say Trump, Vance, J.D. Vance is a way to go. So you're listening to Saving the Investor. I'm Alfie Townsend, Southwest Florida certified financial planner professional. We'll be right back. Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planner professional, here with Pastor John Antonucci, and we are here to share our knowledge and really what happened this week and in the markets. And really, we're going to talk about questions that we hear all the time from our radio shows, our TV show, that people are asking about retirement, what they should be doing, what they should stay away from. And I can't wait to talk about that. But anyway, welcome to the show again, John.
Yeah, great to be in studio with you, Alfie. And, one of the main questions is my financial future at risk? Nobody knows the future. Alfie doesn't have a crystal ball, but he knows how to diversify and invest you correctly so that you can get to and through retirement. And Alfie's going to dive into more of your questions to help boost your financial confidence during these uncertain times. This is a conversation that you don't want to miss, so pick up your notepad and jot his number down, 239-747-1077. You can visit with him in Fort Myers or Naples. And if you have a question, all you have to do is text the word ASK, A-S-K, to 239-747-1077. Text the word ASK right now to 239-747-1077, and we can address your question on the air in a future show. So let's get started, Alfie. I know you're ready to dive into some fantastic questions and help our listeners feel more secure about their financial future. And taxes in retirement is the big topic of the day. Many people understand that while they saved a big nest egg, the accumulation phase, as you always talk about, is the easy part. Harvesting that money and be able to have tax strategies in place to minimize your tax liabilities in retirement is really where you make your money and where 40 years experience comes in handy. What strategies can we implement to minimize my tax liability in retirement is what a lot of people want to know.
So I give you an example. We had someone that came in this past week, and she's a single person, and she has 4 more years before she has to start taking money out of her IRA. 4 more years. And she's frugal, and she's living on her Social Security, but she has other monies, but she's living on her Social Security, and that's enough to pay everything because everything's paid for. So that's a wonderful thing. And I said, has your planner, has your advisor talked to you about, you've had this low income for years and years. Have you been doing any Roth conversions? She said, no, they're not talking about that at all. I said, okay, so you're in a very, very low tax bracket. You can convert probably $70,000 to $80,000 a year without any really tax implications almost at all at a very low rate, probably 7-8% when it's all said and done. And he hasn't talked to you about that. And she said, no. I said, okay, well, this is what we're going to do. We really blew all the years before, but this is what we can do now. Let's look at what we can do now. She has another 4 more years before she has to start taking monies out. So these are things that advisors should be talking to you about, because we know, John, taxes are going to go up. They have to go up. We have a big debt. With a big debt, government's going to think that's all we can do to eliminate that debt is raise taxes. Well, there's a lot of other ways We can talk about how you can increase the taxes coming in by having a great economy, having everybody working, having more people working, having higher wages. That will bring the deficit down because more money coming in. But the other thing is, it's not just on us, it's on the government cutting some of this spending. The government has to cut some of their spending, but there are things you can do. If you have CDs, if you have savings that you're just letting it sit there, if you're not needing the income, you're having to pay taxes on that income. So there's vehicles out there that you can make it tax deferred, or let it sit there until you need it. Then you can take it out as cap gains on some of the other vehicles. So it depends on what your situation, but there are things that we can definitely do.
Yeah, that's an excellent point. And if you have a question or you want to find out more, you can give Alfie a call at 239-747-1077. You also can visit him on the web at savingtheinvestor.com. Go to his website. There's a wealth of information there about his company and all the services that he offers here through the Advantage Retirement Group, savingtheinvestor.com. You talked about her on Social Security. I mean, how does Social Security income impact people's tax situation is what someone wants to know.
Well, Social Security definitely impacts, your taxes because, Social Security was never supposed to be taxed. Okay, it was never supposed to be a tax. It was supposed to be a tax-free. And Roosevelt said, as long as I'm president, as long as I'm alive, it's not going to be taxed. Well, he died, and then it started getting taxed. It's taxed at 85% on majority of people. That means that if, whatever your Social Security is, that wasn't supposed to be taxed, 85% of that Social Security is counted for whatever tax bracket you're in. President Trump in the past has talked about maybe not taxing Social Security. That would be a big thing because if you're not taxing Social Security, then you're going to be able to, at that point, you're able to make more money on your other monies because that is not taxed. But right now, it's taxed. And the way to make it not tax is to either have some deductions, do some tax planning on that. If you have income coming in that you're not needing to take out, we have to look at that. So there's different ways we have to look at different strategies, John, to see if we can eliminate having to pay taxes on Social Security.
Yeah, very great point. And, when you're talking about high net worth individuals, people that have a lot of money in retirement, they're going to pay a lot more obviously in taxes when they take that out. But are there specific tax strategies for high net worth individuals in retirement that you can implement?
Oh yeah, there's definitely tax strategies that we use. We have accountants that we partner with that will look at different strategies. If it's if it's going to be, if we have to, especially if you own a business. If you own a business and there's some strategies that you can do, or you're a 1099 employee, if you have income, a lot of it, if it's from income, there's definitely some tax strategies that are out there that you can. We're looking at one right now, and it's with oil and gas, and that's, you get a nice write-off and you get nice income on that. So these are things that we will show our clients. We want to implement something like that where you get a nice write-off from your investment, plus you get a nice income from that investment. So yes, there are things out there that we can do.
And then you were talking about that young lady who 4 years from now, she's going to have to take required minimum distributions. What is the impact of RMDs on a tax situation?
Yeah, well, at age 7, that's why we always talk about Roth conversions. Why do we want to do a Roth conversion is so you don't have to take so much money out when you're 73 or when you have to start taking money out. That's required minimum distribution is money that you have to take out of your IRA. Think about this. You might have paid in, let's say $250,000 over your lifetime that you got to deduct, okay, from your income. So that saved you, if you put in $30,000, that $30,000 might have saved you $9,000 of taxes that year.
Doesn't seem like pre-tax dollars was the way to go.
Yeah, no, it doesn't, because so you saved, let's just say you've saved about $80,000 in taxes over the course of that $250,000. That's $80,000 that you didn't have to pay in taxes. Well, now that $250,000, because it's in there for years and years and years, let's say it's worth $700,000 now. Every time you take that money out, you have to pay taxes on every dime that you take out. So now you got a tax break of $80,000 on your original monies that you put in, but you're going to have to pay in the neighborhood of $250,000 to $300,000 over your lifetime on this money that's left over. So some tax planning is in the making for you. If you haven't done any tax planning, if your advisor hasn't talked to you about this, we have some programs that we can show you how much that IRA is really going to cost you in taxes. So if you want to know about that, we can run that for you.
Yeah, Alfie has put together a plan and a strategy because this is a ticking time bomb that he's talking about here, and it's something that we don't think about when we're young and we're putting that money in, and we just say, well, it's pre-tax dollars, isn't that great? But you're going to have to pay the piper sometime. And Alfie has put together a plan that addresses uncertainties and instills confidence in your future. As a certified financial planner professional with over 40 years experience as a CFP, Alfie has put together a tax map that strives to help you achieve 3 key goals. Number 1, he's going to show you how to lower your tax bracket. Number 2, protect your money when taxes rise. And number 3, he can actually help you create a tax-free income. That's right, I said it, a tax-free income. You need to be one of the first 9 callers right now. It's absolutely free. Just call the operator or text the word TAX, T-A-X, to 239-747-1077. That's 239-747-1077. Don't hesitate. Call or text now to request Alfie's tax map. You know, the time to minimize future taxes and generate tax-free income is right now. Simply call the operator or text the word TAX, T-A-X, to 239-747-1077. Again, that's 239-747-1077. Alfie, you help people manage their entire estate planning, gifting money to their heirs. I mean, you do it all other than just putting somebody in a portfolio, don't you?
Yeah, we want to look at their goals, John. This is important. You have to be a good listener. As a good planner is going to be a good listener. God gave us 2 ears and 1 mouth, so we listen to what our clients are their concerns and their goals are, and we try to do everything we can to make sure that we're going to meet their goals, not just during retirement, but after they're no longer here and that money passes on to their loved ones. We want to pass it on the most efficient way we can do it and create tax-free income for them or tax-free legacy for them. So there are some great planning tools that we can use. And, not everybody uses the tools that we use. A lot of them just are talking about growing your money. We're talking about growing your money, but we're talking about keeping the money that you're growing and to pass on the most tax efficient way. So, we do a little bit more than just grow your money. We're looking at taxes too, and that's what you should be looking at. We're going to talk more about that right after this.
Welcome back to Saving the Investor with certified financial planner Alfie Townsend. Alfie's book was in high demand last week, and due to popular demand, Alfie is offering it again. A complimentary copy of his book awaits you. To claim your book, simply call the operator and ask for it or text the word book, B-O-O-K, to 239-747-1077. Alfie's book is your guide to a fulfilling retirement. You don't want to miss out on the valuable insights, including many, many stories about investors that he has helped save over his 40 years as a certified financial planner professional. That's why he named this broadcast Saving the Investor, to save you from the pitfalls, the traps, the schemes of Wall Street. Text the word book right now to 239-747-1077 and claim your free copy of Alfie's book. We're talking about questions that you have, and we want to talk about market volatility because I know all of you that are listening to us right now, you love market volatility. You get excited about it happening every single day, and you can't wait to check the indexes to see what's going on. But Alfie, with market volatility, when should an investor, someone maybe who's retired or soon to be retired, consider adjusting their retirement investments?
Well, that's a great question, and it really depends, John. It depends on if they have income coming in and they're not having to really worry about their income. If it's not going to be adjusted one way or the other because of the market, then they don't have to worry as much. But if your income is based on what's inside your portfolio, market volatility can really disrupt your performance and the amount that you're taking out. So if you're taking out a certain dollar amount each and every month out of your portfolio, and the markets are going down, and that's called reverse dollar cost averaging. So adjustments in a portfolio need to be throughout the portfolio with rebalancing. But the good thing about it is you have to have an account that is not going down as a market's going down. Okay, so you have to make sure that you're taking money out of an account that is very conservative, in a sense that you're not worrying about the market up and down. And again, when you retire, that risk, you're sort of talking about risk. This is something that, we adjust our clients' risk. We look at it on an annual basis. That doesn't mean we adjust it annually. We look at it to make sure they're still in that same risk. Now, we talk about how we do risk versus a lot of people say pick a number between 1 and 10. Okay, I pick 7. Okay, that means you're pretty aggressive portfolio at 7. So this is what this means. You're in an aggressive portfolio. It really makes no sense to do it that way. It has to have a rhyme or reason why you have that number, why you have that risk number. So we go through a psychological, it's really a test that a bunch of psychologists put together. And I just think it's the best thing because it's emotional. And you see, okay, here's your $1 million. And with the number that you picked, this is the 95% probability how this is going to work. If the markets go down, with the way you answer the questions, you would be down $225,000. Are you okay with that? Yeah, I am okay with that. Or no, absolutely not. Now, if it goes up, you're up $320,000. Are you okay with that? Yeah, I like that. They like the up, John, but they don't like the down. But these are questions that we ask, and there's a rhyme or reason to each and every one of those questions. So this is something that we really emphasize on. You need to have the proper number for your risk so you're not panicking when that market goes down, because the market, John, it's I wish if it only went straight up, John, then there wouldn't be any opportunity in there. I'm going to say that again. If it only went straight up, there wouldn't be any opportunity for growth, because that would be a CD if you just wanted to go up and no volatility. The volatility creates your returns, okay? But you don't want to take excess volatility, excess risk to get that return. So that's what a lot of people, to have a retirement simulator, that lets us know what's going on inside your portfolio. It lets you know if you have, if you're holding bonds, international stocks, if you have, small caps, large caps, whatever you have, it looks at that. And then what we do is we run it through our retirement simulator process to see if you're taking unnecessary risk, what your fees are, how low it can go, how high it can go. So if you've never really had your whole portfolio, ran through one of our retirement simulator, this is what you need to do, because you'll know so much more than what you know now, and we might be able to put you in a better position than what you are.
Yeah, Alfie doesn't stock pick, market time, or track record invest. He's put together a strategy and an income plan that will get you to and through retirement. He's put together what's called a computer program called a retirement simulator process that does a deep dive into your current portfolio to see what's really going on. He's going to take you back 5 years with your current portfolio and put you next to what he would have done, and you'll see the differences right up on his computer board that he has here in the office. And he's going to make sure that you're not taking undue risk for the amount of return that you're getting, that you're allocated properly, that you're diversified correctly, that you're rebalancing on time, that you're not taking undue risk for the amount of return that you're getting. And he's going to expose all the hidden fees that are inside your portfolio that could be eating up your returns. And you really want to sit down with him. He has 40 years experience as a certified financial planner professional. Let him be a second pair of eyes, a second opinion. You have nothing to lose and everything to gain. He's going to add value not only to your life, but to your current portfolio situation. All you have to do to visit with him in Fort Myers or Naples is call the operator, tell him you want to take advantage of the retirement simulator process, or better yet, pick up your smart device right now. Be one of the first 5 callers, because that's all he can handle in a week. Text the word VISIT, V-I-S-I-T, to 239-747-1077. That's 239-747-1077. Text the word VISIT or call the operator right now at 239-747-1077 and get one of those 5 spots that are available this week. We're talking about market volatility. And Alfie, I know there's people that are listening to us that are on the sidelines right now. They have money maybe in a CD getting 4 or 5%, and they're saying, when do I get in? People that have gotten in and gotten out. You talk about the fact that the opportunity is when the market goes down. For those people that get in and out versus someone who stays the course for many years, there is a vast difference on the amount of returns, isn't there?
The longer you're in it, you're taking volatility out because of the time-weighted return of your investment. So when the markets go down and you've been in it a long time, yeah, it goes down, but you're still up, 100% on your money because you gave it time. If you don't give it time to grow, then what happens is, yes, you get in and the market goes down, and now you get out because the market went down, and then all of a sudden the market rebounds real fast, but you're sitting on the sideline because you panicked. And that's what we do here at the Advantage Retirement Group is we put plans together for you that you see that, yeah, even if it goes down, this is your ultimate goal is to reach it. And to reach this goal up here, you have to give it time in the market. It's not market timing, it's time in the market that gets you the return. So if you're not comfortable with the plan that you have, that's probably why you're going in and out. So you might want to, come over here, let us show you what we do, and it might be a better process for you altogether.
Yeah, give Alfie a call, 239-747-1077. If you're sitting on the sidelines waiting to get in, there is no perfect time. Just get in the market. And Alfie's the great thing, he's not going to expose you fully, your whole portfolio to the market. He has so many different opportunities and strategies that he has here at the Advantage Retirement Group. You want to take advantage of his wealth of knowledge, over 40 years experience as a certified financial planner professional. Give him a call right now, 239-747-1077. You could always text the word VISIT, V-I-S-I-T, to 239-747-1077. Get a review. What do you have to lose? You have everything to gain. Let Alfie Townsend, someone with 40 years, that's 40, I know he doesn't look it, but 40 years experience as a CFP, and he's going to help get you to and through retirement.
Thank you, John. This was a good show because, John, it was one of these questions, a lot of questions that people ask, and that's what's on people's mind. You can't really market time to make money in this market. Yeah, you can be right a couple times, but to be right all the time, you can't do it. So for the long haul, I hope you understand that you stay in it, you rebalance, and you have good companies and you have a good plan to go back to and say, you know what, this is my plan. I'm not going to vary from it. I'm going to know that it is being taken care of. I'm not going to panic. If you've never watched our show, Saving the Investor, it's on NBC2 every Sunday after Meet the Press. It's at 11 to 11:30, and we really talk about these things, but you can see charts, you can see different things. If you never watched our TV show, check that out. And again, if you want a review here, just give us a call, 239-747-1077. And thank you for listening to Saving the Investor radio show. We've been on for well over 10 years now on 92.5, and Jake the Millennial is our executive producer. Thank you so much. Until next week, be blessed.